Thanks, Steve. Good morning, everyone. Welcome to the CHU Commercial Strata Policy Training webinar. My name is Shane Schneider. I'm the Underwriting Manager in Queensland Northern Territory, and I'm also responsible for business initiatives and projects for CHU. Firstly, I would like to commence with acknowledgement of country. Personally, I am in Brisbane, which was founded upon the homelands of the Turrbal and Jagera peoples. I'd like to acknowledge the past, present, and future traditional custodians of the land on which we live and work throughout Australia, and their continuing connection to land, sea, and community. We extend our respect to their elders past and present, and extend that respect to all Aboriginal and Torres Strait Islander peoples. Today, Stephen Chupak, our Head of Underwriting, will be talking to you on our commercial strata product. Today's session will impart to you valuable information around our product offering to enable you to increase your knowledge and enhance the support of your clients. I'll be on the line with other CHU team members to respond to any questions, so please ask questions in the chat box and we will respond to these. Should there be any we cannot respond to, we will come back to the person asking the question following the session. Some further housekeeping. Today's session will attract one CPD point with ANZIIF and one with the SCA. This session is recorded and you will receive a recording via email next week. I'll now hand over to Stephen Chupak. Thank you.
Thank you very much, Shane. I've noticed a few people in the chat have said they're having problems with audio. So Lisa's posted a phone number where you can dial in if you're having issues. So, well, that's not much use. People can't hear me. Hopefully they've picked up the chat themselves. But yes, very happy to be here and present on commercial wording today. It'd be remiss of me not to introduce Shane Schneider, who gave himself an introduction, but also Daniel DeBonis, who's been my offsider and counterpart in the national team for a couple of years, as well as Claire Burke, who has been the New South Wales ACT underwriting manager, and more recently has become a manager of our specialty risk team, supporting the business in terms of defects and so on. So we have a panel of experts to field your questions, which you can type into the chat, and they might also chime in when I inevitably forget something important to say. So you'll predominantly hear from myself. You might hear from any one of those experts on the call. So let's get started. So today we're focusing on the commercial wording. So we'll do a policy overview, who it's designed for, and go through each individual policy section. So for those who have been doing commercial strata a long time, you may already know a lot of this, but hopefully it's a good revision. For those new to the game, we're really pitching it just at what the basic level of cover is under each policy section. So hopefully there'll be something for everyone. The Q&A will be facilitated through the chat. There's no option to come off mute and raise questions, but as Shane said, if we miss any of those, we will be able to come back to you after the completion of the webinar. So a bit of a marketing spiel first. So why choose CHU? So we've won multiple awards in terms of Underwriting Agency of the Year. I think we actually won it this year too. I think we don't have this completely up to date. We should have 2022 on there unless someone wants to correct me. But yes, yeah, we did. Thank you. We've got almost 1 million properties protected. We've been doing this since 1978. It's our bread and butter. We know what we're doing with Strata. We live and breathe it, and hopefully that's reflected in the awards and service we provide to you. We're very proud of our 24/7 claims progress and emergency hotline, and even more proud that 40% of our claims are processed under 24 hours. Because let's face it, insurance for most parts, unfortunately, is a grudge purchase, but at the time of need, when you need a claim paid, CHU does its best to go over and above. We also have a long progressive history. I mentioned we wrote the first residential strata plan. That point's really important. It doesn't just sound good on paper and it's a good marketing spiel. The reason our longevity of the market is important because when it comes to price setting, we're able to put real data, real claims data in without the big data modeling engines to get the best guess at predicting the future technical price for a strata risk. That's important because we're using real claims data combined with external models like Bureau of Meteorology weather models and catastrophe models and so on, whereas some of our competitors with less experience in the market have to rely on assumptions and best estimates or postcode averages. So our longevity in the market provides us a lot of benefits, and the insured's lots of benefits well beyond just looking good on paper. We have a whole suite of products. So as I said today, the focus will be on the commercial strata side, but we do landlords and contents for residential strata. We do community associations, which are scattered through Queensland, New South Wales, South Australia and Western Australia, with a lot owners' homes extension, as well as build to rent, which is effectively blocks of units which aren't subject to strata title. But today, the focus is on commercial strata. So what is commercial strata insurance? Very simplistically, whilst there are some legislative exemptions, the majority of strata schemes are required to hold building insurance for full replacement value, for full replacement and reinstatement value, and public liability. Land value does not come into the equation, so it is full replacement and reinstatement value. And yes, there are some minor exemptions in certain states. So for instance, in New South Wales, there is an exemption where you may not have to insure if you're a 2-lot scheme with no common areas, but check your legislation depending what jurisdiction you are. Very generally speaking, all strata schemes are required to have these insurances in place. Our commercial product is designed to cover commercial schemes and mixed-use schemes. So a common example of a mixed-use scheme would be where you have a supermarket on the ground floor, like a Coles or a Woolworths, and then there's blocks of units above forming like a residential tower. So in order to qualify for the commercial product, you must have at least 20% of the commercial floor space or higher to qualify for the commercial product. There's no magic scientific formula for why we pick 20%. It mirrors the application of the terrorism levy applied by the ARPC. So for any commercial risk, whether it's strata or another line of insurance business, if you have 20% or more floor space, you have to contribute to the ARPC. So that's where we set the threshold for that. So today we will go into detail in all 10 of our policy sections, starting with insured property, because insured property, building property, whatever you want to call it, is the most claimed against policy section and probably the most well known. So my advice to all of you on the call is to make sure, if you have one takeaway from this call, it's make sure you read the definition of insured property within our wording, as well as lot owners' contents, which will go into it, because there's some people who work and play in the strata industry who will use throwaway lines as it covers common property only, which is actually not strictly correct. Strata insurance covers a lot more. Yes, it does cover common property, but it also covers permanent fixtures and fittings, which form part of a building. So it covers the shell and anything deemed permanently fixed within the building. So an example of that could be kitchen bench tops, which are permanently fixed to within the unit. Now, the maintenance responsibility falls within the lot owner for that, but the insurance responsibility is actually included on the strata policy. So please make sure you have a read of your PDS after this if you haven't already. I would also mention that we have a broad form loss or accidental damage policy, which effectively means if the claim or peril you're claiming against is not specifically excluded, there is cover in place under our policy. One final comment I would make, there's a bullet point up there about the sum insured. We will pay up to the sum insured selected and shown on the schedule. The importance of obtaining a current insurance valuation has never been more critical. I don't want to wax lyrical because the media has done it well for us, but since COVID, since the catastrophe events, particularly East Coast floods, so there's global conditions as well as local conditions have led to huge claims inflationary pressures. There's been construction cost inflation. You can go to the Australian Bureau of Statistics, which will show that the level of construction price index is running about 17 or 18%. And that's not just East Coast where claims have occurred. It's running at 16% and things like that in Western Australia. So it's a countrywide thing. So please visit those, but stress the importance of getting a current insurance valuation. I'm well aware that different jurisdictions have mandates about the frequency to get valuations. So your owners corporations may well be meeting those regulatory requirements to get an insurance valuation at least once every 5 years. However, I stress the point that we're living in pretty unprecedented times, and there's been some significant inflationary pressures which may lead to underinsurance. So please stress that with your clients. Finally, there's no average clause in Strata. You're insured up to the full sum insured and replacement value. There is no average like there is in some commercial lines elsewhere. So what's covered in the building? You'll see a lot of bullet points listed there in terms of common things which are included, which are permanently fixed. Now, the examples in this slide are probably more relevant to that of residential, but or perhaps office buildings, but the overriding principle remains the same. So generally speaking, something can be deemed permanently fixed if, by removing that item in question when you're vacating the unit, it would cause considerable damage. So that's not actually written into the policy, but by way of claims interpretation, that's probably what that's going to be the sense check of the sense test to see if it would form part of the insured property. But again, please read your policy wording. Often people in the Strata environment use an analogy of if you turn a unit upside down and shake it, what doesn't fall from a roof is covered under the the Strata insurance policy. And that's a pretty good analogy. Of course, there's exceptions and you need to read your wording, but that's a pretty good analogy to go on. We also cover common area contents. So common areas are those not inhabited or deemed within a lot or unit. So common examples of that would be carpet in common areas, common furniture, you might have artwork or pot plants. Again, a lot of these examples are probably more to your residential, your mixed use, or your offices. But again, it paints a picture of what is common area and what are common area contents. It's important to note business contents within lots is not covered by the Strata policy, business contents and effects, and also lots which can be easily moved within a commercial lot outside of business effects need to be included, are not included in the Strata insurance policy and need to be included in their own separate policy. Okay, so there's two types of benefits under our building insurance policy. The first is additional benefits. And most of the additional benefits you'll see are aligned to requirements under legislation to include items in replacement value for things such as removal of debris, professional fees, the cost of rebuilding, any taxes associated. So most of the additional benefits under the policy form part of requirements under relevant Strata legislation, and they're most typical in most property insurance coverings outside of Strata as well. In terms of special benefits, there's 24 in total, so not enough time to go through in an hour webinar each individual one, but just to go through some which are most commonly accessed. So the loss of rent temporary accommodation. The commercial product will offer this 15% as 15% of the building sum insured as standard. And this provides cover to either compensate loss of rent in the event of a damage claim under the policy one, or to vacate the unit to another premises should it not be able to be occupied following a loss. Very important to note that loss of rent and business does not cover business operation costs, loss of profits, business continuity plans. They need this under their own business insurance. So please take note on that. Another frequently claimed item is water damage and burst pipes, which is the bane of any property insurer, which has been evidenced more than ever this year. So our policy will actually cover reasonable exploratory costs. It's actually unlimited reasonable exploratory costs, which is pretty big given water is the single biggest claim in Strata more broadly. Another claim under the policy is the fusion benefit. There's no kilowatt limit, but included in the building sum insured is cover for motors up to $5,000. and there's more extensive cover available under machinery breakdown, which we'll cover later. For any of the CHU people on the call, if I missed anything very important regarding the main section of our policy and building insurance there, you think I need to cover?
Steve, I think you've hit the main points.
Beautiful. Thank you. Okay, well, you mentioned in the intro that your policy, most policies and most strata requirements must have building and liability. So liability is policy 2 under our cover, and it provides cover for the owner's corporation entity as a whole. So owners corporations have, I don't know if you call it fortunate, unfortunate, or whatever you call it, but an owner's corporation, the lot owners which make up an owner's corporation, has joint and several liability. So this means any shortfall in the event of a payout will be borne by individual owners. So let's explore that in a bit more detail. If the owner's corporation, if a court awarded against an owner's corporation as an entity $30 million of damages, and that owner's corporation had $20 million of cover, there's $10 million shortfall between what's insured. This has to be borne by the individual lot owners, and presumably they would first seek this by way of special levy. But if certain owners cannot meet this special levy, resulting in bankruptcy, the remaining debt is then reallocated amongst the solvent lot owners. So it's very important to know that there's an unlimited liability for these lot owners and have a joint and several liability under legislation. So when I say our, CHU's liability policy covers personal injury and material damage, up to the sum insured shown in the policy, and as a broad form accidental loss or damage policy, there's deemed cover in place as long as there's not specific exclusions. A specific note for commercial occupants, as I mentioned, for building insurance, they need to have their own business insurance to cover their own business interruptions. So for example, if you're running some type of industrial industry like a woodworker, and an employee left an extension cord out internally within the lot which an employee tripped over, that's not claimable under the strata policy. That would be claimable under the own business's insurance. So hopefully that explains the delineation between them and the importance that the owner's corporation requires its own liability for personal injury and material. Individual businesses need their own liability to cover their business operations and within the lot. So I mentioned before, lot owners form part of the owner's corporation, which is why in certain instances, lot owners can actually take action against the specific body corporate or owner's corporation as an entity due to negligence. So the important thing for liability is negligence needs to be legally proven. Now, negligence may not be proven until it's gone to court. So it's not as simple as saying we're not negligent or accusations of negligence. If the alleged claim following an incident can't be resolved outside the courts, it will then proceed there, and cover is in place to protect all costs associated with that, including legal fees, the cost of defending the claim, and potential damages against the owner's corporation. There's a bullet point there saying the individual owners are not covered by the policy, and that is because the policy protects the owner's corporation as an entity as a whole, even though that's made up of individual lot owners. That just means that if the owner's corporation sued, the action would be against strata plant XYZ, not John Doe. So we always say in the underwriting space that the best way to approach liability is proactivity, to take action to maintain the building. So rectify any known risks such as trip hazards on common property, defects. That's the best way to minimize your exposure to liability. You can never truly eliminate risk, we know that, but if you've got an active maintenance program in place, if you've obtained safety reports or defects reports and taken action to rectify that, in the event there was a slip and fall claim on common area or another form of claim lodged against the OC, if it went to the courts, being seen as proactive is much likely to lessen the award against you rather than being inactive in relation to liability claims. The next policy under the commercial wording is policy 3, voluntary workers. So this cover is actually compulsory in New South Wales, and voluntary workers protects those lot owners or residents who are doing voluntary work on behalf of the owners corporation. And this is work that the owners corporation actually was aware of and agreed to. It can't just be, I was doing my own thing and I'm a member of a strata scheme. Examples of it could be taking the bins out at a complex, changing common area light globes in common areas, carrying out working bees in common area gardens. That needs to be ratified. If you want to be protected, go to the nth degree to be protective. Owners corporations could actually minute who voluntary workers are in their annual general meeting minutes. That's not a requirement for cover, but that's the maximises the best chance in case there was any confusion come claim time. A voluntary worker cannot receive any fee or reward, and that includes any form of gratuity. So that, strictly speaking, means you can't give a bottle of scotch at Christmas to say thank you. I just saw something. I know my team is actively answering the chat, but I just saw one pop up as I was talking about, is there an excess applicable to voluntary workers? No, there's no excess applicable to voluntary workers. It's not built into the wording or applied by manual underwriting action. Workers' compensation. Workers' compensation is only an optional cover in Tasmania, and ironically for commercial only, and in ACT and Western Australia. So workers' compensation legislation is quite tricky. It differs from state to state. We cannot advise you on when an owners corporation needs it. You need to ring your equivalent of work cover New South Wales, whatever that might be in your wherever you're situated, because it will provide cover for those deemed to be receiving an award or wage and those deemed as a worker for the owners corporation. So someone that is employed by a worker. And there's different cutoff points for how much wages you're paying to them. You need to ring your local authority in that area because it does differ from state to state. It's important to note there is a difference between employees and contractors. So employees, you tend to be paying their leave, their superannuation, things like that. And an example of that could be a live-in caretaker in these larger schemes, whereas a contractor can be deemed someone you're paying an invoice to and they come and mow the lawn every week or two or whatever it might be. But it is a grey area. That's why I recommend you ring your local relevant state body on that. I've actually done that for ACT, and historically New South Wales was able to offer it some time ago, and it's quite tricky to even get an answer from the experts, and that's why we don't dive into it in too much detail here, because it is a challenging grey area. But please make sure you contact your local authority in that matter. For those states, again, I emphasise Tasmania, ACT and Western Australia only are the only states and jurisdictions where CHU can offer workers' compensation at all. Policy 5 is fidelity guarantee. So this provides cover for misappropriation of the owners' corporation's funds. So in South Australia, this is actually a compulsory cover. So the mandated requirements in South Australia from 2014 came in that it must be for a maximum balance of the OC's bank accounts at any time for the past 3 years, or $50,000, whatever is higher. So our minimum fidelity guarantee starts at $100,000 and you can buy up from there. In South Australia, it's required. In all other states and territories, it can still be a valuable cover. We've actually had fidelity guarantee claims. We had one exceed $1 million and it was against a strata manager, and it actually led to an imprisonment. So historically, there has perhaps been a view where fidelity guarantee would only be for your smaller policies which are self-managed, and that having a strata manager negates that potential cover being required. But we have had most of our fidelity guarantees have actually been where a strata manager has been involved. So it's interesting that perhaps old school analogy doesn't quite ring true. It's important to note that it covers not lot owners' own personal funds. So it's the money you hold in trust for the owners' corporation. Okay, policy 6, our office bearer's legal liability. So as opposed to the policy 2, which protects the owner's corporation as an entity, this provides cover for individual committee members who are volunteering to be on the executive committee, not just the chairman, secretary and treasurer, but anyone representing the committee. And there is a definition of committee office bearers in our wording, which I suggest you raise. It can include the strata manager if they're acting in that capacity. But the important thing to note is committee members have an unlimited liability doing what's ultimately a voluntary role in most cases. So just think you're doing what you think is a good deed, you're representing your building in maintenance and so on, but in the worst case scenario, you could ultimately have an unlimited liability and lose every asset to your name from doing that. So it is important for the owners, for the office bearers to consider this section of cover. We can't advise how much is enough because the committee members need to take into account their own personal circumstances and decide what level of protection they'd like in order to do this role. But it's certainly worth them considering and looking at these options. Now, when I compare policy 2, the liability to the owner's corporation, to policy 6, the key differences, as I mentioned, being one is for the owner's corporation, one is for individual committee members. There's a small crossover in the fact that a lot of states and territories strata legislation has what's called good faith provisions under their act. I know New South Wales and Victoria has this. And what this ultimately means is that where an office bearer is deemed to have acted in good faith during a claim that's arisen against them, the liability can attach to the owner's corporation as opposed to the individual. But the tricky sticking point there is who is going to deem when the office bearer has acted in good faith? It's likely only a court system who's going to make that decision. It won't just be a couple of people sitting down around a table. It's going to be an external third party, most likely a legal entity, determining whether they've acted in good faith. So there'll be costs associated with that action, even if it is deemed down the track that liability attaches to the strata scheme because of these good faith provisions. So just an important reminder, office bearer's legal liability covers individual committee members, as Mr. Joe blogs, and whereas the liability policy covers the owner's corporation as an entity. Important to note, office bearer's legal liability is not the same as directors and officers, given we're talking about commercial insurance policies. Directors and officers is relating to your business activities as a whole and covers other things such as slander and things like that, and more specific business operations. The purpose of office bearers is to provide protection for the individuals for doing their duties to administer the functions of the owner's corporation. Nothing to do with their business or nothing to do with them being a director and making decisions which impact on the business. They need their own directors and officers to cover their own business exposure. Machinery breakdown. So I mentioned earlier on in the presentation that we have a fusion benefit under policy 1, the building cover, up to $5,000. Machinery breakdown is a more extensive cover, which provides cover for electrical and mechanical components in machinery. There's no kilowatt limitation. The only limitation is on the sum insured selected. And we can have machinery breakdown sums insured ranging from $5,000 up to $500,000. Another important item of note with machinery breakdown is that each individual claim can be paid up to the sum insured shown on the schedule, which means if you have a sum insured of $100,000 on your policy for the annual policy period, you could in theory have 7 different claims payable up to $100,000. It's not a first loss cover, which can be exhausted by multiple claims. It gets reinstated up. The sum insured gets reinstated following a claim. So that's a very big point for people to consider when owners' corporations are considering what level of cover is sufficient. Because we have had them phone in the past saying, I've got all this equipment I need higher because it's going to aggregate to like $2 million. It's actually about the sum insured, maximum sum insured payable per claim per plant item. Another part of machinery breakdown, which came into play a few years ago, it's relatively new in the scheme of things, is a loss of rent component. So an example of this could be where a lift breaks down as a result of mechanical failure, and therefore apartments can't be accessed easily in significant buildings, 20, 30, 40-story buildings. There might be access issues due to people's personal circumstances. There is a benefit in place there to pay up to 20% of the amount shown in the schedule, up to 30 days. It's important to note a policy condition under this section is that the breakdown of the plant and equipment must extend for more than 7 days. However, it does give a peace of mind if should an area of a building not be able to be accessed due to some mechanical breakdown. Strata is becoming more and more mechanically complex as technology continues to roll on at a pace we haven't seen before. So yes, it covers things like lifts, elevator motors, sump pumps, air conditioning plants, and car stackers. Also your real heavy duty material like your chillers and your cooling towers on rooftops. Car stackers are getting more sophisticated than ever and have a lot of computing and electrical software behind them. So on bigger schemes particularly, building management companies often provide insurers an asset list, which has the individual value of each item. We don't necessarily require that, but it's a good way to review with your owners corporations. Ask them if they have an asset list, which will describe what sort of equipment they have, then they can make an assessment of what an appropriate level of machinery breakdown might be. I've mentioned the mechanics of how machinery breakdown works. I've got ahead of myself, obviously, before this slide came up. So it's about that claim is that each individual claim can be claimed up to the full sum insured shown for machinery breakdown. Okay, policy 8, catastrophe insurance, which is very topical given the events of the past few years and this year. So catastrophe insurance provides cover for the increased cost of building and repairs as a result of a weather-related catastrophe. And we have so many recent examples of this. You'll know it's not just insurers stating it as a way to sell extra business. Ever since COVID happened, 2019 bushfires, the ACT hailstorm, the East Coast floods, we're all experiencing it now. The huge demand for builders and tradespeople, the increasing cost of insurance. I would implore everyone on the call to look for the under insurance article we released about 4 weeks ago, which actually details the cost of inflationary costs and pressures on the industry. Policy 8 provides cover for this escalation of costs. So some critical elements to it are there must be a claim admissible under the building sum insured. 2, before policy 8 can be accessed, the sum insured under the building insurance must be exhausted. So that means you can't just have a flood event, skip policy 1 and claim straight on policy 8. The claim is lodged under the building insurance first, and then subsequently, should there be a shortfall, then cover can be enacted under catastrophe cover. Third point is that the event that caused the damage must be declared a catastrophe by the Insurance Council of Australia. That's built into the wording and is quite common amongst property insurers. And we'll pay up to the sum insured selected. So in terms of CHU's offering of catastrophe cover, it's done as a percentage of the building sum insured. So the options available is either a catastrophe sum insured can be selected as 15% of the building sum insured or 30% of the building sum insured. We can't offer more than 30, but they're the two options available to the client. So I mentioned it's very topical. It's not just insurers making it up, but it continues to be a challenge to engage contractors. With the floods on the East Coast, there are still hydrologist reports being waited on by poor insureds waiting on a claim settlement. So there is a significant demand, which is evident even now. And those events happened in February and March. So it continues to be topical and should be a consideration for any owners corporation moving forward, whether they're in a disaster prone area or not. Policy 9 covers quite a few different facets. So the first being government audit costs. So the main purpose of a government audit cost would be a taxation audit. So the scheme would likely have to be registered for GST. So in New South Wales, that would be contributing over $75,000 of levies per annum. That may differ from state and territory, but the main purpose of that cover would be provide some reimbursement of costs should there be a government audit imposed on a strata scheme. The second part of the cover is appeal expenses. So whilst it's not frequently accessed, we've had some good examples where owners corporations have saved an absolute bundle by having this level of protection in place. A good example was some time ago in Adelaide. There was a multi-storey building where a sheet of glass, actually a large sheet of glass, fell out from a few stories above ground floor. And council obviously were concerned. They ordered that the building be completely scaffolded immediately while they investigate the cause and so on. The cost to scaffold this large building would have been over $500,000 outlay from the very start. So the owners corporation moved very quickly. They obtained independent expert advice stating that scaffolding wasn't necessary. They did an inspection of the windows to ascertain that it was the likelihood of this was a one-off event rather than a systemic defect. And whilst they weren't successful in having the order completely removed to do like a full window audit and so on, the severity of it and therefore the cost was significantly reduced because they didn't just have to put $500,000 of safety scaffolding in case it happened again. They still had to pay for experts and so on, but they didn't have that additional expense. They could just go about their business and do their window audit and submit what was required to council to give them a level of confidence that a future occurrence was not going to occur. The last section of the policy 9 is legal defence expenses. So this is probably the most claimed, actually it's not probably, it's definitely the most claimed benefit under our wording, under policy 9, I should say. And what it does is it protects the owners corporation for action brought against them. It could be by a lot owner, could be an external third party, for matters arising outside of personal injury or material damage, which is covered under policy 2, which we covered earlier. So some examples of this could be where owners corporations are taking action against a lot owner for not having paid their levies. The lot owner is disgruntled because they have defects in their unit, and they say, well, you know, we haven't been paying, my defects aren't getting fixed, so I'm not paying my levies, and therefore I'm going to actually countersue the owners corporation for not fixing the defects in my unit. So that sort of claim we're seeing quite a lot of. We've also seen a lot of claims on brand new builds where in the inaugural period, where the developer still owns a lot of units and so on, there's been a long-term building management contract entered into for like 5-10 years. All the owners move in, they see the value of the contract and they're not happy with that. There's been action taken against the owners corp for that sort of claim. But it's really for claims up to, well, the maximum payable under policy 9C, the legal defences, is $50,000, but it's for claims raised against the owners corporation for things outside of personal injury and material damage, and it is used frequently. On all of these benefits, government audit costs, appeal expenses, and legal defence expenses, you must get our prior written consent before taking action, whether that's engaging lawyers, whether it's doing a window audit in the Adelaide case I gave you. And the last section of our policy is policy 10, lot owners, fixtures and improvements. And this cover leads to a lot of confusion around our insurer base. The best way I can describe it is it's really a safety blanket in the event that the sum insured under the building under policy 1 is insufficient due to factors that the owner's corporation was not aware of. So for instance, you can imagine if you had a 100-unit office block, the valuer is highly unlikely to be able to get into each individual unit and assess who's got really fancy marble bench tops, really fancy fixtures with materials flown in from Europe and so on. So they have to make their best guess at the replacement value. So they put their sum insured forward. In the event that sum insured is exhausted and there's lots, they're saying, well, we haven't been able to reinstate our property back to the state it was in before the claim arose. If they can provide evidence of an increased value in permanent fixtures and fittings, like the examples I gave, there's cover up to $250,000 a lot in addition to the sum insured. Couple of caveats. Again, the claim must be admissible under policy 1, so the building cover. The sum insured must be exhausted under policy 1, so a bit similar to catastrophe insurance. You can't just run to policy 10. The owner's corporation must submit a claim under policy 1 first. If that sum insured is exhausted and individual lot owners can provide evidence that they have above standard fixtures and fittings, they'd provide that and be able to claim up to $250,000 per lot. So it really is a sleep easy cover, and the reason it came into play, as I mentioned before, it's a sleep easy cover for the owner's corporation. We don't want the owner's corporation penalised for facts which they may or may not have been aware of. If the owners don't tell them they're doing a significant upgrade within their lot, there's no way they can factor that into their sum insured. In a perfect world, they should be including all these things in the sum insured, but we realise, particularly for these larger buildings, sometimes the owner's corporation has absolutely no knowledge of these things occurring and wouldn't have a clue when the sum insured needs to be changed or not. The final slide goes into what I said. It's a peace of mind cover, must be a claim admissible under policy 1. But in a perfect world, if you are aware of renovations or anything the lot owners have done, please make sure you factor that into your sum insured, at least in between valuations if they're happening at a regular basis. Forward it to your valuer if you've got a valuer who's scheduled to do valuations every 2 years or whatever the frequency might be. Give them all the information so they can factor it in. All right, so that's the end of the formalities. We'll go into the chat, which Claire, Daniel and Lisa have been answering all the questions. Are there any outstanding questions which the CHU folk online can direct to our attention? I can answer verbally, given we have time.
Yeah, so Steve, there's one here that we've answered all of the other ones that have come through, but there was a question in regard to, from Mike Moriarty, in regard to occurrence versus claims made, because his question was, do you mean the loss occurs in the period or does the actual claim have to be made? So I think Mike would benefit for some clarity around the occurrence basis versus claims made basis and the reporting parameters in the sections.
Sure. So policy 6, which is office bearers liability, and policy 9, which is the government audit, the appeal expenses and the legal expenses, is a claims, it's a claims made basis. The claim has to occur during the period of insurance, whereas all the other policy sections 1 through to 5, policy 7, machinery breakdown, policy 8 and 10 are all on an occurrence basis. So hopefully that answers that question, Mike. Thank you for the question. Are there any other ones which haven't been answered?
Other than that, we had answered them all up until this point in time.
Okay, so I can just look at the questions, comment, and
but we have so we have a couple there that have appeared. So if you have a look at the chat thing, you'll see a couple that have popped up. Yeah.
Do I recommend lot owners fixtures be added? Well, I as a person can't recommend, as some general advice to ensure your property to maximize the chance of your property not being underinsured. yes, the valuer should be factoring in things which are defined under the building insurance under each strata policy, and that would include lot owners' permanent fixtures and fittings. So yes, I would recommend that if you're engaging a valuer, they have prior knowledge of strata schemes, they have knowledge of strata legislation, so they can factor that in. There's another question from a Peter Gorn. Are claims likely to be declined if a lot owner has undertaken upgrades without OC formal approval? That's a bit of a hypothetical, and you won't like this answer. It will depend on the circumstances. I mean, if a claim is admissible under any section of a policy, there would likely be cover. There are exclusions in place under both building insurance and liability for any works arising out of any claims, arising where the works are greater than $500,000. If you have not notified us before that, there is an exclusion to exclude any claim from that point on. There is also, as a benefit within the building insurance policy, it enables owners to carry out works up to, and my wording in front of me, it's either 100,000 or 250,000. Perhaps one of the CHU underwriters on the call can clarify that and put it in the chat. If there were works are less than 100,000 or 250,000, they don't need to advise us as the insurer to get consent, but there is a definite exclusion under the policy where if works are being carried out greater than 500,000 and we have not been notified, then those claims would be excluded. There's a question from Matthew Rod. Do you have an example of property loss that failed to insure for full replacement value in New South Wales? We've had claims which have been settled for the full sum insured on a couple of smaller schemes, and we have had a claim up on the Central Coast, or Northern New South Wales, I should say, where 80% of the sum insured was exhausted when only 2 of the 5 units went up in flames. And this particular scenario was pretty much symmetrical little towers, given it was only 5 units, like 2-story walk-ups. One of them went, the other one was untouched, and 80% of the sum insured was exhausted. So we've had claims where, because the owners corporation chose not to rebuild and so on, we didn't see what the rebuilding costs were, but we did pay up to the sum insured. But we've certainly had other examples whereby the sum insured was well and truly, had it been a total loss, they would have been well and truly underinsured. Question from Peter Hartley. If the tenant owns the fixtures, should this be covered by the OC policy, or the tenant be arranging their own cover? So my recommendation would be, if the tenant owns the property, if it's a business effect or something, it should be included on their business insurance. I'd recommend everyone on the call read the definition of insured property and see if what's been looking to be insured is deemed to be part of a building. Also, make sure you reference lot owner's contents. There is a specific definition for lot owner's contents, which may call out specific things like dishwashers, business and personal effects, their own computers, things like that. So that's where the line can get a bit blurry, but please make sure you reference those definitions within the policy, and you'll get your best chance of having sufficient cover and knowing where the responsibility for insurance lies. But otherwise, thank you for your time. This time of year, hope you all have a merry and safe Christmas and enjoy some well-deserved time off. Have a safe break, and we'll look forward to seeing you all in 2023. Thank you very much.